What's up, Stephen Johnson stocks coming at you a day later simply because the taxi driver stole me fucking laptop. So it's getting investigated right now by the RTA and probably then the police. But I'm going to find him Liam Neeson style, and then I'm going to bite his ear off Mike Tyson style. But let's get into some stocks because the market, the SPY, the Dow, Bitcoin, fucking NASDAQ is all crashing turbulently. Not turbulently, but it's crashing. And I am short AMF. What am I short? I'm short AFMD. One of the biggest positions I've ever took because it's a pattern I'm fairly familiar with. If that cracks, I'm going to be overall green. If it doesn't, it's a bit of a risky situation. I shouldn't have probably gone as big size as I have. But focusing on last week, one of my biggest wins ever, POTN short, and one of my daftest trades of the year in a short. And an overall progress update. Check it out, live the dream, and I'll see you every week as normal. Nothing will stop me. So, Jeevan here. I'm not going through an Excel because I've recently lost my laptop. I am hopeful of getting it back still. I've narrowed down the taxi, who it is, but I'm not going to labour on about it. Worst case, I'll lose it. Best case, I find it and the taxi driver has handed it in. If he hasn't, he will go to prison because stealing is a fucking crime. But that will not go on about that. But yeah, let's look at it from a different perspective. I mean, from July to July, constant losing. But after 12 months, I started to bottom out. It literally only took 12 months before I started learning enough to break even in the stock market, including commissions. And then from July to October was a kind of July, August, 4 months of kind of figuring shit out, little coiling action uptrend, and then I exploded. Made about 5 grand across October, November, December, 5 grand in 4 months. Before I got a bit overconfident, a bit cocky, sized up too much, and slammed back down, losing about 3 grand, and now I've bounced up a couple of grand, making about $700 in the last week. Now, I expect to have more losses. I expect to be down 1,400, 1,500, and then bounce back to only down 500, then above green again. Like, it will be choppy. It's 2 steps forward, 1 step back a lot of the time. But on the whole, I'm feeling good. I am in a big position, AMDF, I mentioned it earlier. But for now, let's get into the trades. So POTN was a definite kind of solid short. And I know this because the weed sector goes up and down and up and down. And some stocks have the day and others don't. I mean, if you go back a year, we can see that it went from the 1 census to the 7 census, and then back to the 2s, and then up to the 9s and back down. And obviously this run is significantly bigger, but different times when weed gains momentum, the different stocks run. Now, the important thing here is determining the first red day, because we had this little run up here, and then we had the first red day, and then it kind of gapped up and ran further. And so how would you know that this first red day was the actual day to go short? And it's kind of tough and you don't know, but I actually waited a little bit, and on the 30th of January, on this red day here, I can actually mark it out for you. This one here, this was the first red day that I went short, and the reason was, I can explain it in a little bit more detail on a 15-minute time frame, but we'd had this, on here we had a red day, and then it gapped up the next day and ran. But on here we had a red day, and although it gapped up, on this day I looked at the 15 to 20 weed stocks that I'm tracking, and every single one of them was red. And I was thinking, that's it, the weed sector is completely shifting momentum. Despite the fact that this is gapped up, it's quite likely that it's going to come straight back down, because I'm pretty positive on this day when this stock had a red day and gapped up, it would not have had the whole sector in red at the time as well. Now, that's just one indicator. You can look at the overall sector strength. The other, probably more useful indicators, if we just maybe go 10 days, 2 minutes, we can see this this crazy run, and it's a very kind of bullish run, and it kind of holds this nice little upward trend all the way up. But then we have this afternoon crack, and normally afternoon cracks like this here, it's not a good sign. It's a sign of the end of the move. If you have a morning panic, sometimes it's just stop losses going off. But an afternoon panic, it can be a sign of the end. So when it panicked down, I actually did bought this, made about 150 bucks. And then it panicked, and then it kind of couldn't get back to its highs. And then the next day, this is the chance where it's going to have its green day if the move's going to continue. But it didn't. On this day, we actually had a second morning panic, which again I did bought. A little bit more risky because it was the second time it had panicked and it hadn't regained all of its highs. Did bought this again and made a couple of $100. But when it couldn't even get above the previous place where it had panicked, that was when it was a real sign that this was the end of the move. It was kind of the first red day. It couldn't get back to its highs. It had already panicked twice, couldn't get above its previous panic spot. And for that reason, I was thinking, no, this is a short. So although it kind of gapped up from its closed point, I was thinking, no, I'm going to be short in the 77, 78, 79s. Actually, was very, very fortunate that I built in at the open up in the 79s and 80s, and I kind of top ticked it, and it just came all the way down. I was covering some in the 70s, the 71s. I held through this bounce, thinking it's over. And then I covered the rest in the 69s, 68s, missed the bottom. And then I had friends who were a bit worried when it bounced, but ultimately it crashed even further down to the 60s and then even further down to the 40s. I don't know anyone who held down to the 40s, but it's a very good short. And the key ways of recognizing weakness are the big afternoon panic is the first sign of weakness. The second morning panic where it doesn't quite get back to the highs, it can't break this high of where it panicked, that line becomes resistance. We can mark that out here. You can see, look, where did the panic not get past? It didn't get past its previous low. Look where the panic and then in the morning, the short, when it breaks through this level, boom, where does it fail to get through again? And boom, it can't get through again. Slight gap up for a bit, and then it just crashes and burns. So you can see how support and resistance, really, this is the key pivotal point, this 74 cents area. Once it panics here and can't get above it, despite the fact that it gets above it for a second, I still think it's a very good short into here. And you can literally bank from the 70s right the way down to the 40s if you time it right. And sometimes when there's not that much action in it, you can just simply make mistakes and do dumb shit. And I went long on the wheat sector despite this terrible, horrible downtrend that the wheat sector has gone through. I was like, oh, I'm going to catch the bounce. I'm going to catch the first green day. I was buying on the 31st. And when you think about it, I mean, it's not, you've got a bit of support here. And you can see on its first ramp, it had that little left shoulder. Which you could argue potentially could be support, but not particularly. I mean, you've got to think that I was buying on this day here, and it looks. I mean, I don't know if we scroll back. I mean, there really is no. You've got to think this was a green day when I was buying it. There's not much argument really. I mean, there's so many bag holders under this. There's not really much volume. There's no different volume from previous days. It's 1.5 million. Can't really argue a reason why I went long on this. In hindsight, it was just a daft board trade that really got me in trouble. And I can see this day here. This was it here. I mean, it popped up on kind of minimal volume, 20, 30,000 shares. Not a lot for this stock, really. And when it popped up to the 525s, I was down on the day a little bit, and I just chased. I chased up into the 525s, pretty much the top, the 520s, 525s. And when it dipped, I was like, oh, it's just another morning panic. It'll come back up and average down. And then by the time it got to the fives, averaged down one last time in the 502s, 503s, popped up, thought I was safe, thought it was bouncing, and then I cut it at 5, thank God, because it went down to the 450s. So ultimately, I took a 25-cent loss on a $5 stock, which is about, I don't know, it's about 4 or 5% loss. But it could have been a 10 or 15% loss. And the difference between the add-ons in POTN is that stock was uptrending, that stock was strong, the wheat sector was strong. Trying to think that you can turn a first green, like I was playing the first green day thinking it would push all day. It didn't have the volume and it collapsed. Fair enough, you tried the first green day, but you've got to be cutting 521, 522, take a $30 loss. It did not have to be a $300 loss. It turned into a $300 loss because I averaged down and down and down and down. And I turned a first green day pattern long into a dip buy pattern, but the dip buy pattern didn't work because, again, there's no sector strength, there's no sector momentum, there's no volume. It's not an uptrend in stock on the daily, it's a downtrend in stock. And trying to dip buy a downtrend in stock is simply fucking suicide. So this was by far probably the worst trade I've made in the last 3 weeks, I would say.
This coffee is strong. Too strong.
Welcome back to Stephen Johnston Stocks. Hope you enjoyed the show. Some key things to remember, as you've seen with my journey, as I've seen with other people's journey. 1, sometimes you have to expect that you might lose for the first year. 2, sometimes you might have to expect that you're going to be up and down a bit for the year after that, or even 2 years after that. Like Michael, who was recently on the Steady Trade podcast, said. You should check that out. And lastly, this fucking shizzle is a journey, so expect that it could take 3, 4, 5 years to get profitable, and look at your progress on a 3 to 6 month segmentation, and never judge yourself by your last trade, good or bad. Comment 5 years if you nah what I'm talking about. And I do a mint wrap, really good wrap, on the Steady Trade podcast episode out now. So check that out, live the dream. I'll see you later. What does it sound like again? Steven's in the USA. Steven's in the USA. It's like that fucking song by that skinny bit who pretends that she's a rock star, but she's a fucking loser. Is it Kesha? Might be Kesha. I'll see you later.